Bitcoin has rebounded slightly Friday after dropping to its lowest levels since 2020.
Yeah, despite the slight gains, the cryptocurrency market is still sinking. Billions of dollars in crypto assets have been lost. It was sparked by the collapse of the stablecoin, or Terra USD, which is supposed to be a safer crypto because it's one-to-one with the U.S. dollar.
And now there's growing concern as certain 401k plans begin offering cryptocurrency as part of their portfolios, that individuals who invest in them may be putting their entire retirement savings at risk. So for more on all of this, we want to bring in Chief Financial Analyst at Bankrate, Greg McBride. Greg, welcome. Great to have you with us. So stablecoin was supposed to be just that, right? Stable. So why did it lose its value, and why did that set off losses for other currencies like Bitcoin?
Well, selling begets selling. And so there's been a lot of questions about just sort of the backing of a lot of these stable coins. Are there sufficient assets to pin that value at a dollar? The Terra coin in particular, it wasn't based on that. It was based on an algorithm. Well, in times of market stress, sometimes those algorithms break. Sure enough, that's what happened. And as that stable coin proved to not be so stable, that produced a lot of selling really across crypto assets. And it comes at a time where risk assets of all kinds, stocks and bonds included, have been under price pressure because the cost of money is going up. And so I think those sort of accentuated a lot of what you'd seen in crypto as well.
Yeah, well, crypto became super sexy. And as a result, we're seeing more and more investment companies starting to use crypto as a retirement, or at least offer it as a retirement portfolio option. Is that really safe?
Well, you're seeing a lot more financial providers offer access to it because they can make money doing so. Fidelity has announced that they're going to make that available through the 401k plans that they administer. Ultimately, it's going to be up to employers, and the employers are supposed to have a fiduciary committee to act on behalf of the participants to make those decisions. And initial figures indicate that a lot of those fiduciary committees are unlikely to get on board with that because volatility is the name of the game in cryptocurrency. And most people don't save enough for retirement. Most people don't have any clue how to invest what they're saving for retirement. So introducing a purely speculative asset into that, to me, is not a good mix. And I'm no linguist, but
Right.
It sounds more like gambling than investing to me.
Yeah, well, some people say that's what investing is, but we'll stay away from that overall. But so for those who have invested part of their 401k in cryptocurrency at this point, is there any chance that they could get some of that back? It might bounce back, or should they decide to sort of reinvest and move those assets into a more stable class?
There are no shortage of people that will cheerlead for crypto and say it's going to the moon. But understand one thing. Those prognostications are based on hope, not on fundamentals. I mean, this is a purely speculative asset. There are not underlying fundamentals. It's not like a stock that represents ownership in a company that produces earnings and pays dividends. It's not like a piece of real estate that generates rent or some other form of cash flow. No, it's purely speculative in nature. So, this is something that, before you put money into it, I think you've got to evaluate if you have your other financial bases covered. Yeah. Do you have adequate emergency savings? Are you maxing out your tax advantage retirement savings? Have you paid off your other high cost debt? And are you utilizing tax advantage plans like a health savings account or even something like a flexible spending account? Very few people can check all those boxes, but I would say all of which are prerequisites.
Yeah, I can't check them all.
I can't check them, yeah.
Great points made. Greg McBride, again, incredible analysis there. Thank you.
Thanks.